Hello traders, welcome to another trading week. I welcome you guys to another trading week and also another opportunity to do a top-down analysis on the gold chart like always. So before we continue, I want to say congrats to those that followed my analysis on the previous week. Like on my previous analysis, I told you guys about this trade I'm holding here, which I'm targeting 1 to 2, and that trade I hold the trade from Friday last week till this till when the market opens. So as the market opens, in that video I also spoke that maybe as the market opens we might see the market reversing from this resistance that is here. So I warned in that video that when the market opens, like nobody should be expecting to buy immediately, that you should wait for this high to be broken, which didn't happen. As the market opened, mitigating this resistance here, the market returned to the downside and to seek more liquidity or grab more liquidity before going to the upside. As you can see here, the market just come back down and swept liquidity, swept this low, previous week low, and started the last low of the week and started moving to the upside. So that is my previous week analysis. So congrats to those that followed my instruction. So with that being said, let's go ahead and see what we have on the chart today. Going from higher time frame to the lower time frame to see what we have going into the week. So if by the end of this video you find it anything helpful, don't forget to like and subscribe to keep the channel growing, because at some point where the channel grows to a stage, let's say when we hit 1,000 subscribers, I'm going to start teaching more of the in-depth of SMC in this channel. So that is my plan, and I need you guys to support me to accomplish my plan. So with that being said, let's go ahead and see what we have for the week, starting from the monthly time frame. Just to look at how the monthly time frame is. So here on the monthly time frame, all we can see is that the market is strongly looking bullish, as it have been for the previous, let's say, last 3 weeks, momentumly bullish. So when this happens, we're always going to be looking for buys, especially when you're swing trading. Even when you're day trading, looking for more of opportunity that is signaling buy is more high probability, unless you're a scalper. So going down to the weekly time frame, what do we have? We have the previous week still taking out the sweeping the low, so which is something like this. This last week candle swept the low of the previous week candle, and now this week now we have taken the high of this week that swept the low of the previous week. So with this now, all of them are still like signaling to us that definitely we are going to go to the upside. Always remember that trading is reactive and not predictive. You can't predict exactly what is going to happen, because the market can react at any level and start doing whatsoever it likes. So with that being said, let's go down to the daily, see what we have. Here on the daily, we are still having the internal highs broken to the upside. Like, I've analyzed this sweep that happened here, and this sweep that happened at this level, sweep of liquidity, and the market start to make a move to the upside. So right now the market is still broken the internal highs. Finally, this week we have a break of structure. Last week we have a break of structure at this level. We have a break of structure at this level now. So going into this week, I'm see more like expecting a continuation to the upside. But before that continuation, I'm expecting like, let's say the market should have a small pullback to the downside, like to mitigate something to the downside before continuation. So let's go down to H4 to see the bigger picture of what we have. So here on the H4 time frame, this is what we have. This liquidity here being taken out. This is more like SNR, not trend line. SNR liquidity taken out, and we have this breakout structure. So with that now, what do we have? We should expect the market to come back down and take out this level of inducement. So more like gold is having more clean price action, like it have always been in the previous past week. Because for the past week I've been having I would call it ranging at this level. But right now we are more like having clear price action. So right now I'm waiting for market to come back down and take out this inducement level and probably give me a confirmation, a buy confirmation at this level. At this level. So this is exactly what I have. So if the market should come back down and take out this inducement, I'm looking for the buy because this level is high probability, coupled with the fact that already we swept this low that is here before breaking this high. So this level took out liquidity, creating this other block that is here. So with that now, I'm more interested here for the buy at this other block. OB. So now I'm waiting for the market to come back down and mitigate this other block before I start buying to the upside. So that's what I have. And if you look here, you can still see that the market still have something like trendline liquidity, which the market will also need to take out, tap in this POI before going to the upside. So that is the probability of what I have, the high probability of what I have currently now on the gold H4 time frame. And also don't forget that we might also have something like the market coming back down and doing something like this. As we have broken this high now, the market might retest this high. It's like break and retest and continue to the high upside. But the high probability setup I have will be the market to come back down and clear some liquidity before breaking structures to the upside. So that is what I have on the H4 time frame. The market can react at this current imbalance that we have here, and or this one that is here, and continue to the upside. But if that happens, I'm not going to be taking the trade. I will be more interested in this trade when I have the market come back to this POI and giving me confirmation before continuation to the upside. So let's go down to H4, H1 to see what we have in the H4. Already in the H4 time frame, I'll say that what you should expect to see going into the week is the market As the market have broken this side, expect the market to come back down here to mitigate this other block, or the market retesting this level and continuing to the upside, creating more inducement. So that is the probability of what we have here on the H4. So let's go down to the H1 now to see what we have. Before we continue, let's clear this chart. But like there's no need of even clearing the chart. The whole thing still like the same way it is in the H4 time frame. It's exactly the same way it looks here. So looking at it, all we have here is this break of structure and order flow here. This place we have another flow, OF. So refining the order flow, we have this order block here, which have not been mitigated. We have order block at this level. So we have order block, order flow, and the refinement of the order flow. We have another block. So we are waiting for this market to come back down, clear this liquidity here, mitigate the order block or the order flow before we start looking for our buys to the upside. So that is what I have here on the H1 time frame. The whole chart is looking very clean. There's no complex. So try to keep it as simple as possible. Wait for confirmation at every level highlighted here before entry. Yeah. So checking the 15 minutes here as well. Still the same thing. Still the same thing. Still the same thing. Like this is the break of structure level, continuation to the upside, and the only liquidity level we have now is this level here. Though we can still, we are in the 15 minutes, we have this inducement at this level. We have this inducement here. So this is what we have. Don't forget that the market might react here and continue to the upside. Don't forget that the market might react here and continue to the upside. Everything is possible. So right now the market is reacting in this imbalance. The market is reacting on this imbalance here. So the market might react from here and continue to the upside. Already markets have proven to us that it is heading to the upside. So the market might react here and start moving to the upside. IMB. So inside this imbalance, the market might continue up from here or come back to take out this inducement, mitigating this shadow here. This is a non-mitigated shadow. Why is this a non-mitigated shadow? Because this level grab liquidity. This level grab liquidity. If you look here, we see that we have a sweep. Let's put it as a sweep. And this shadow here have not been mitigated with a, this is not like a hidden POI. A level that grab liquidity, a wick that grab liquidity stand as a hidden POI. So to mark the hidden POI now, let's use horizontal line to mark the hidden POI. So something like this. If the market should come back here after taking out this inducement, there's still high probability that this level might react price might react here and continue pushing to the upside because this level here took out liquidity. This level here took out liquidity. So that's why we are looking at this level as a level that might hold price. So that's what we have on the gold chart. Everything is looking bullish. Everything is looking bullish. So wait for some of this level we highlighted for the market to react and give us confirmation before we start buying. And before I wrap this up, I'm going to still show you guys how to mark the advanced market structure in the SMC way. So maybe most of you have been finding it difficult how I mark my structure. Like what makes this high a confirmed high? What confirm this break of structure? Let's go down to H4. Before a structure will be confirmed, before a structure will be confirmed, I already have analyzed what we should expect here on the 15-minute. The market might react here and continue up, but the high probability we have now, if the market should give us good entry here in the 15-minute, we can go from here at the 15-minute entry since the market is reacting from this imbalance. So, but if this level should fail, that means our next level to look for should be this level here. This should be the next level where we should expect the market to react from. This extreme, order block, and order flow. So this is what we have here on 15-minute. And wait for the market to react at this level before you start buying. Wait for the market to react at this level before you start buying. Don't go aggressive, don't go against the market. Wait for confirmation before you start buying. With that being said, let's go ahead and see how to mark structure using the SMC way. So this is a quick guide on how I mark my structure. So before you confirm a break of structure like we have here, this is a break of structure here. Before a break of structure can be confirmed, there must be an inducement that has been taken out. So in this case, this is the inducement that has been taken out to confirm this high. And to confirm this low, we have to break this high. I come again. To confirm this high, it have to take out inducement. To confirm this low, it have to break structure to the upside. So that is how we mark our structure in the SMC way. So the same thing again happened here. The market took out this inducement, this high now coming back down, took out, this is not a valid break of structure, and this is not a valid break of structure. You can mark it as a break of structure, but in reality, with the SMC way of marking structure, it is not a break of structure. Why is it not a break of structure? Because this one here took out inducement, took out internal low. But if you look now, this one came back down, mitigate something here, but didn't take out internal low. I went up and broke the structure to the upside. So making it is not a valid break of structure, but this one here, coming back down, we took out this inducement. This high became a turned to a strong high because it took out this inducement. We can now call this high as a main high, while calling this low a strong lower higher low when we broke this high. So when we broke this high, that is when we can now call this level a break of structure. After we broke this high and close above it, though the market can come up and weak it, but in that way you can still call it a break of structure. But to confirm a main break of structure, the market have to break and close above with a body of the candle. So this level now is, we took out inducement before breaking this one. So this level is not a valid break of structure. This one is not a valid break of structure. Though if you look here, we broke the high, but it's not a valid break of structure because we didn't take out inducement. But this one here, we took out inducement before breaking this one. So this one is now our valid break of structure. So that is how we mark our SMC structure in a clear way it can be understood. So also at this level here, we also have another break of structure here. Another break of structure here. Why is this break of structure valid? Because we took out liquidity at this level. We took out inducement at this level and mitigate something below it before continuation to the upside. So this is a valid break of structure here, and this is a valid break of structure because we took out inducement, This one also because we took out inducement, but this one is not a valid break of structure, and this one also is not a valid break of structure. So that is how we mark our SMC structure break in trading in the forex trading. So let's go ahead and see how to spot it out on the chart. Let's use the H4 time frame in this for this example. So here on the H4 time frame, this is what we have. If you look here, this market is going to the upside. Let's start from here. So we took out this level of inducement and confirm this break of structure here. Though this one is not a valid break, but it's a break. But why am I saying that it's not a valid break is because if you look here, we just swept the high, which is like grabbing liquidity, just a sweep, but it's a break of structure, but we didn't close with a candle body. So the same thing happened here. We took another inducement on this level. If you look here, we're having a break of structure. But why is this one not valid? I can even say that this is the level where we confirm this one that happened here. So when the market, after sweeping this level, coming back at this again to the upside, this is now where we confirm the break of structure. It wasn't confirmed at this level. At this level, it was just a liquidity grab. So, and the market come back down, yes, and continue to the upside. Again, another break of structure happened here. The market took out this inducement. To confirm a valid inducement, though I'll make a different video for that, it must be a candle, a valid pullback, which will take out the low of the previous candle. but that will be on another video. So we took out another inducement here, mitigating something here, but this video is not more of marking POI, but just let's mark it out. So this POI here, the market reacted from here and continue to the upside, giving us another break of structure here. So to keep this video short, I don't want to go much in details, but this is how I already have a video about this on my channel. You can go ahead and type how to mark SMC structure and it will come out. You can go ahead and watch it on my channel. So here we also have another break of structure, confirmed break of structure. It is confirmed because the market break and close above. The market break and close above, not like this one. At first we break above it, but we didn't close with a body of a candle. But coming back to the upside at this level, we have a candle body closing above it. So this is now where we confirm this break of structure. So at this one, we took out the inducement at this level. We took out the inducement at this level and break the structure at this level. So the same thing continues. If I should also mark this one, so this is another one here. Inducement taken out here. And we have our break of structure confirmed at this level. After the inducement, this high is confirmed. After we took out this inducement, this high is confirmed. And after we break this high, break of structure, this low turns to a higher low. So that is how to mark our structure in the SMC way. So this is level now is a break of structure. Because we took out inducement. But without inducement, there is no valid break of structure. Like this one here, this is not a valid break of structure according to our structure mapping approach. So that's how to mark a structure using the SMC trading pattern strategy. So that is it. You can go ahead and rewatch this video and go to your chart and practice marking the structure. Don't mark the structure without waiting, without inducement being taken out. So that is how to mark your structure using the SMC strategy. So with that, I come to the end of this video. If you find value in this video, don't forget to subscribe, like, and turn on the notification button to get notified whenever I drop another video like this. So let's go in our trading this week and see what we have in the gold chart. Like always, wait for the market to give you a confirmation at every zone highlighted here before you take your entry. Don't rush it. Wait for confirmation before taking any entry. So that is it. With this, we'll come to the end of this video. See you guys on another one. Peace out.